This is part of our 2022 not-for-profit speaker series. This is session 5, the final for this year. And if you were able to join all of the previous sessions, we are so happy that you were able to be on. My name is Madeline Robbins, and I'm our production manager here at Cherry Bekaert. This year, we've been inspired and humbled by the efforts of not-for-profit to fill gaps created by declining program revenue, donor support, and funding. And that's why we are again offering this session free of charge for CPE. So before we get started, let's cover some of the housekeeping. To receive CPE credit, you must answer at least 3 polling questions and attend for the full 50 minutes. Those CPE certificates will be issued via email within 10 days. If after 10 days it has not been received, please feel free to reach out to cbhlearning@cbh.com. A recorded version of this webinar will also be available in about a week. It'll be sent via email and posted to our website. If you have any questions during the webinar, please type those into that Q&A window. We also have reactions enabled, so if you'd like to react to any of the slides, feel free to do so as well. We will be posting a short survey at the conclusion of the webinar. We value your feedback and just ask that you take part. With that, it is time to introduce our speakers today, Stephanie Isham, and we also have Brian Liffick with us for today. They are both audit senior managers with Cherry Bekaert. And please, Brian, go ahead and take it away.
Thanks, Maddie. Yeah, so happy to be here with everybody today. As Maddie mentioned, I'm a senior manager. I sit in Orlando. Been with the firm about 6.5 years, about 12 years, 13 years in public accounting at this point. Work primarily in not-for-profit and then the public sector work. I just wanted to mention a couple things about our slide deck here. We did, well, actually, Stephanie presented this at a different conference. She did all the heavy lifting here. So all the slides are pretty interesting. We did a presentation 2 years ago, I think it was, and it was on single audits. And that stuff is just so hard to make exciting. So at least the slide deck is going to be exciting for us to go through today. And then Stephanie, did you want to introduce yourself and take us away?
Sure. Thanks for the credit, Brian. My name's Stephanie Isham. I'm a senior audit manager out of Charlotte. I've been with the firm, I think I'm going on my 5th year, and I was with the previous firm before, but I exclusively work with nonprofits and a lot of higher education clients as well. So I'll go to the next slide to kind of talk about our session overview. So this session is aimed to provide you with all the necessary information to kind of learn what are single audit findings, talk about if you get one, where are they reported, and then what happens next if you get one. And then depending on time, we can go over some of our, just some single audit reminders for this kind of upcoming year. So we actually already have our first polling question. So have you had a single audit finding before? So we'll give you a few minutes to go ahead and answer those.
I really wish we could see people's reactions to the slides. Your little was that Dora?
Dory from yeah. Yep. There we go. We're getting some reactions. It's probably from all our CB people. Am I supposed to close? I think, could we close the poll? Oh, there we go. Okay, so about 50% say they have not received a single audit finding, and hopefully that stays that way. 29% at yes, and then a few other answers. Sorry, there we go.
All right, so I will take us into the single audit findings, what makes them become reportable, kind of the auditor's thought process of where these findings come from. So here we have Jim saying, no, don't get a significant deficiency on internal control over major programs. So obviously, we all know internal controls are a very important part. Kind of backing up though, the compliance supplement really defines what the auditor is going to be looking at. So with that, they're going to be defining the compliance requirements that we're going to be testing. And with each one of those compliance requirements, there are controls that we need to look at related to those. So that's where this finding kind of circles around, is that there's internal controls over those major programs in which we're testing that we need to consider. So a little bit different there. So segregation of duties can be a big area there. Another example that we see often is perhaps when you're taking those and preparing your CFA, and perhaps you're not reconciling those. That can be an internal control deficiency there. And on the auditor's side of things, we're taking that and saying, how significant is that? How pervasive is this issue? And it can be a significant deficiency. And then, as you see in the last sentence of that first bullet, there could be a material weakness depending on how significant that issue is. One thing I wanted to mention here is, staff turnover is not an acceptable answer for internal control deficiencies. I think a lot of people think, oh, well, so-and-so left. And yes, that is the rationale, or that's the root cause of it. But sometimes you need to have those defined policies and procedures, make sure that you have some cross training involved, as well as the review processes to make sure that you don't have those issues if somebody leaves. Now, if we go to the next one, wouldn't it be great if we didn't have any rules around this stuff? Thanks, Tina. But yes, material non-compliance. So as I just mentioned, the compliance supplement defines what we're going to have to be looking at as auditors. What's going to be those compliance requirements? Well, were you non-compliant with those is the first aspect of that. So was something not followed? So here in the example, notification of the reporting requirements did not reach the applicable granting authority within the required time frame. That makes sense. You didn't meet that requirement that they defined in the compliance supplement. And then from the auditor side of things, we consider, is that a material issue, or is that something that is not that material to the program as a whole? So that's why sometimes you might have some conversations with the auditor about other things, but typically that's a hard sell. If you're not compliant, you're not compliant, and it is probably material to the program if we're looking at it. We move on to the next one. So this is just taking it a little step further, that these are going to have to be reported if they reach this certain threshold. So question costs would be, let's say you have allowability of costs, what costs are allowable under your grant. Then if we, as the auditors, test that and find out, oh, you had a $50,000 thing that was not an allowable cost under this grant, that would then trigger this type of finding instantly, because you're not having correct costs applied to this grant, and that's what you were presenting on your CFA. So one example of that was the allowable costs. Perhaps you have the period of availability. That's a common one in grants, that the grant defines when you can incur those expenses, when they're going to actually be obligated for you guys. So if those are outside that period of availability, then you would have concerns here of potentially having a question cost outside the period in which you should have incurred it. Other areas, maybe earmarking or matching, you have some flaws in that calculation, and you're not having the correct costs associated with that. And then one other would kind of go back to the reporting aspect that we covered, that was a significant deficiency, that maybe you're not reconciling your CFA to your underlying general ledger. And if that's the case, then you may have over $25,000 that was not supposed to be on the CFA, which would trigger this type of finding as well. That one's a good one. So this is just kind of the same one we just covered, just that it's for a major program that's not being audited. So kind of unique here. Usually you don't come across these quite as much, but if you do, it might come from the financial statement side of things, that maybe they've found an entry that was incorrect and realized, oh, that's related to grants, not a grant that we're testing, and then may trickle through as a finding there.
Another one we brought up in our other conferences, this also could come up if you're doing a follow-up on a prior year finding of a different program, and then you do that follow-up and you kind of find that there's more issues. So that's another good example that came up.
Yep. So not quite as common, but something during the audit process triggers it being looked at, and then it's found. So this one is related to the auditor's report on compliance for major programs. If the auditor is saying that they're not given an unmodified opinion, then obviously there's some underlying issues there. The one example we have here, significant lack of supporting documentation to conduct the single audit. That makes sense that the auditor is going to change their opinion and give you a either modified, qualified, some other sort of opinion. And usually this isn't just going to happen just off the cuff. You're going to have other significant issues. You're going to have those deficiencies. You're going to have question costs. That this is more of a significant area here. So you're going to have kind of a buildup of things to get to an other than unmodified opinion for your financial statements. I know you really like this.
I do really like this one and the next one. So
so fraud, as auditors, we keep this top of mind all the time. Any known fraud affecting a federal grant. So kind of makes sense. This example that we have here, dispersing federal aid to fake organizations, fake students, anything like that. That's a one that you hear about the most, probably, as far as fraud affecting student or any federal award program. But the audit process is really shaped to do those inquiries and uncover a lot of that. But I mean, fraud, there's usually collusion involved in it. So sometimes these can be hard to identify and find out. But if they are aware of that and it's affecting a federal award, that instantly becomes a reportable finding, and there's no scope threshold for that. If there's fraud related to that federal award, you're going to have a finding. I will mention one other thing, like that as an auditor, I encourage everybody to just be fairly open or fully open with your auditors when they're asking about fraud. Anything that you can think of is always helpful to bring to the discussion. Even if it is outside parties or other stuff, just to make sure that there's full communication there, just to make sure that you're being comfortable and transparent there. All right, and then the last one, and I think this meme, like, or GIF, I guess it is, GIF, whatever it is, really encapsulates the finding the best, because it's the status of any prior year audit findings reoccurring. So she's just laying flat-faced on the ground, spinning around on the same issues she's had in the past. So usually this happens if the auditor has the same findings back-to-back years, prior years, same underlying cause, no corrective action was taken. As we're going to cover later in the presentation, the corrective action plan, if that's not followed through on, usually as an audit practice, you're going to have to take that and escalate that more severe of a finding. And then that can really drive significant concerns. We'll talk about later the issues of having findings and where you're going to go from there. That's going to trigger you to have more audits done, more stuff to be done. But yes. And all right, let's see who is paying attention to our, is it GIF? I've never known.
I don't know either.
What animal stole the wallet in the GIF about fraud findings? I know that was your favorite, Stephanie.
I've spent way too much time finding all these for this presentation.
Like I said, I think you did a good job of pairing them, that they make sense with the ones that they're applicable with. Yeah, I see that hand clap there for you.
You can just get caught up looking. There's so many on the web to find, so you can get caught up just looking and looking and looking.
Mm-hmm. All right. The majority of people got it right. There we go. The dog was the one. So not a very technical question there. Kept it quite easy for you guys.
Okay, well, I'll take the next section. And this is just going to go over, so all those findings or all type of findings that Brian just kind of went over. I'm going to go over where they're reported in the single audit. So to kind of know where they're reported in a single audit, we'll just quickly go over just kind of your contents of a single audit submission, so that and then we'll talk more in detail of each sections. So the first one is the auditor's report on compliance and internal controls over compliance for major programs. So this is just that letter, or one of the letters when you get your audit report. This is one of the letters that has, you know, the Cherry Bekaert or your audit firm's letterhead on it. And on this letter, you're going to kind of see in a paragraph kind of a note that there was a finding this year. So then you have your auditor's schedule of findings and questions costs. This is going to be the main section that's going to talk about your audit finding. You'll also have your entity's summary schedule of prior audit findings. We kind of mentioned this in the previous slide, but this will be where we do a follow-up, and it's follow-up on your prior audit findings, and there'll be a schedule for that. And then you have your entity's corrective action plan that will also be included in the submission.
And I think, Stephanie, I'd just encourage everybody that if you do have the finding, make sure you consider that corrective action plan before your auditor gets there the following year. Make sure whatever you said you were going to do is followed up on, because that's integral in keeping yourself in a good position for future federal awarding and your single audit process as a whole.
Agreed. So the first kind of part that we wanted to go over, and this is where it's going to be the finding elements. So I remember when I first started auditing and I saw we had a finding and we had to write up the finding, and someone gave me this as an example, this template, and I was like, man, we're really like sticking it to them that they have a finding. We're just going to repeat it over and over. But what you kind of later find out is that there's a required layout and template. So your auditors aren't being mean. They're just following the kind of boilerplate format that they have to use. And there's certain elements that we have to discuss. So I'm going to go over each element of the findings so that you can kind of understand what it's trying to say, so that when you review your audit report with your auditor, you can kind of have maybe some input or discussion if you have any questions. So first, it's going to talk about the program that had the finding in it. So for this example, off to the left, it was a student financial aid cluster that where the finding was found. And then there's the compliance requirement. And so this compliance requirement is coming from the compliance supplement. And so if you don't know what that is, you can go on Google and look up the compliance supplement. It's an easy read of about 2,000 pages. And that is this is really just the auditor's tool of how to test all the different federal programs. So the auditor goes to this tool and it tells us pretty much step by step what we need to test and what requirements for each program. And so for this example, and I'll say there's 12 compliance requirements within each program, and then some are applicable to the program, some aren't. So for this example, the compliance requirement that had a finding in it was the special tests and provisions requirement. And then specifically within that, it was enrollment reporting. And so then you're gonna do your condition and criteria. So your condition is really what is the problem and what is happening. And then you have your criteria, and this is kind of why they're put together, or why I put it together. It's what should have happened. So you're telling like what happened and then what should have happened. And then you're going to have the next section is you're going to have your cause. And so this is kind of your opportunity a little bit to tell the story. So make sure your auditor knows why the finding happened. Because it's important just to kind of make sure it's clear in this, and you'll be able to do this in your corrective action plan in addition as well. But it's really good to kind of tell your story in this paragraph of what's happening. And then you have, I'm missing my sections. I caught up, yes. And then you have your context. And so your context really, it's gonna tell your audience or your reader of your financial statements. It's gonna say how big the issue is. And so, for this example, there was some reporting that wasn't getting submitted. And so let's just say out of 50 reports that should have been submitted, 10 weren't submitted. So it kind of gives the reader a real understanding, is this a pervasive issue, or is this just a isolated event and you just didn't submit one, but because that happened to be the one the auditors tested, they give you a finding. Next, you're going to go over, they're going to write up the effect. So what is the effect? And for this kind of example that we have up, there wasn't a major effect, but if you were to have a finding where you had to return funds back to the federal entity, this is where you're going to say, because of this finding, we had to return $30,000 of funds back. And so this is really, this can be an important one. Important element to discuss. It's the kind of so what, or why does the reader care, or what's the impact. And then next you're going to have your recommendation from the auditor of kind of how going forward, what should you do so that there are no conditions and causes, and you're kind of correcting what happened.
I think, oh yeah. One thing that I know you kind of alluded to it, but encourage everybody that if you do have the finding, work with your auditor to discuss that cause and context section, kind of speak your story there. Sometimes we, as the auditors, just put the basics or the general information that's necessary, but there's no kind of right or wrong way of, as long as there's consensus between you and your auditor, you can kind of adjust that accordingly. I know I had one recently that an individual had died that was subject to grant funding, and then that caused there to be a finding because they weren't eligible, but they didn't. But as the auditor, I didn't want to put somebody died in there. So we worked through that with them to make sure that they told their story most appropriately for what they wanted to have in that context.
And sometimes I think just jumping on the phone with the auditors, I think as accountants, we always hide behind email sometimes and kind of don't always talk, but it is good to have that full story and jumping on a phone, understanding it. I think it can really help the auditors write this up a little bit better.
Agreed.
So the next thing I wanted to go over is the corrective action plan. So this is really, we kind of talked about it before, but this is the auditee's chance and letter that we're going to include as part of the audit package. And so it's going to be on the auditee's letterhead, and the auditee needs to address all the findings. So if you had multiple, the auditee needs to address each finding that they had on the schedule of findings and questions cost. You also are required to put a contact person on this who's responsible for the corrective action plan. So probably shouldn't be your intern or your office secretary, because there's a chance that whoever you're getting the funds will have some type of follow-up with you. So you certainly want to make sure someone who can speak about the program is getting that call, if there is a call. Also, you're going to talk about your corrective action plan. So what is your plan to make sure that this doesn't happen again? And we've kind of talked about it before. Your auditor is going to follow up with you in the next audit. So really making sure your plan is something that you can in fact accomplish, because we could have to heighten that finding if you don't correct it. It also requires a completion date. So when you think you're going to complete, or your anticipated completion date of this corrective action plan. And then I personally never seen this, but if for some reason you disagree with the finding that your auditors have found or presented, the corrective action plan is your opportunity, if you disagree, to kind of tell your story of why you disagree. And what we say, and what you're supposed to do is give very specific kind of explanations and reasons if you do disagree, to kind of support your case. I hope that wouldn't be the case, that you and the auditors can kind of come to an understanding, but if for some reason you can't, this is where you can do it. You have the opportunity to speak up. Ryan, have you ever seen one?
I have not, but just to emphasize, even if you disagree with it, you still have to have that corrective action, and everything she mentioned previously. You would still have to have that information and plan to rectify whatever the auditor is saying. But if you disagree, you can still state that in there as well. But no, I've not come across anybody that's disagreed with the finding. I mean, typically the compliance supplement defines everything. It's there in writing. It's somewhat difficult to have a finding that isn't something that is justified.
I think the first one, like I said, I've never seen one, but in the presentation we did this last, there was someone who within the audience was saying that because we presented this and said that there was an opportunity to disagree, and their poor auditors, they were like, oh, great, I'm gonna write my paragraph on why I disagree. So hopefully they don't say Cherry Bekaert told them to do it.
Hopefully they just say Stephanie did.
Yep. The next thing I wanted to discuss, and this is pretty obvious, but you have your schedule of prior audit findings. And this is, I feel like now I've said it 3 times, this is where your auditor is going to follow up with you on any findings you had in the prior year. And they're just going to discuss the status, where you're going to see it's going to have reference numbers, and those reference numbers are going to match your prior audit. And also just it's going to include the update. Nothing else really to note on that, but hopefully you don't have your audit findings, so this is just an easy schedule.
Yeah, hopefully it just says none.
None. Next, it's your finding will also show up on your data collection form. So this is, for those who might not know, this is your submission to the Federal Clearinghouse. So if you get a single audit, you have to submit your single audit to the Federal Clearinghouse, and you do it through this data collection form. A lot of times auditors will draft or input the information, and then it's the client's responsibility to review it. So we've kind of right here, if you look in this green box, these are the different tabs within the data collection form. So if you go into the system, or your auditor might give it to you, is you're going to see an opportunity to export into an Excel version, the data collection form. And so what I'm going to go over with you is the different tabs on this Excel export. So the finding will show up on the federal awards tab, the audit information tab, the audit finding tab, text of audit findings, and text of the corrective action plan. And so I'll give you some snips and examples of where to look at it. So as I mentioned, the first place it's going to show up is on your federal awards tab. And just as a reminder, what the federal awards tab is, that's the tab where it really it lists out every single program that you got the federal awards, the dollar value, was it a major program, was it tested? It has this kind of, the majority of the data collection form has all the information. But if you go all the way off to the right, you're going to see, I think it's potentially the last column, but it's off to the right. And it's going to say, were there any findings on this program? And this is, and you can see column C, number of audit findings. And so this is where you need to make sure when you're reviewing it, that if you did have a finding, you need to say CO a 1, 2, or however many findings you have associated to that program. The next area you're going to find it is on the audit info tab. And on this tab, there's a bunch of questions and a few check boxes. And about midway through on this tab, you're going to see these 3 questions. So is there significant deficiencies in internal controls? Was there a material weakness? And was there a material non-compliance disclosed? So you want to make sure that the yes or no is correct according to whatever your finding was. If it was a material weakness, significant deficiency, or did you have non-compliance? So the next section you're going to find it is the audit finding tab. This one probably is a pretty obvious one if you open it up to make sure to look and make sure this is filled out. So this is going to just again discuss in a little more detail the audit finding, and that's pretty much all I have to say about that one. Next, you have the text of the audit findings. So this is just a copy and paste from your statement of schedule of findings and questions costs. So whatever, and this is all the different elements that we discussed. So you're just going to copy and then paste that right into this text. And same goes with the text of the corrective action plan. So you're just going to copy and paste all that information straight into here. And that really takes care of your data collection form and all the different areas that if you get a single audit where you need to kind of review to make sure it was filled out.
And once again, just kind of encouraging the audience that when your auditor, if they're preparing it, or if you have somebody else preparing it, make sure you're doing a very thorough review of this document. I mean, that first tab, the federal awards tab, has so much detail in it that there's different just zeros used, just different things there. And then you have to have all the respective assistance listing numbers, as well as other granting numbers and the totals. So just definitely take some time when you're reviewing that to ensure that that's correct, because ultimately that is finally your responsibility, even if your auditor is preparing it. Hopefully they've captured everything appropriately there, but just in case, that still falls on you to make sure that that review is thorough.
Great.
Oh, I'm up. All right. I do see that we have one question. I don't know if we want to take it right now. It was about your section, Stephanie. I think we can work that in real quickly.
Yeah.
It was, does the auditor have to check the individual items that were in error in the previous year, or just check the corrective action plan and test the current year results?
Say, well, does the auditor have to check the prior year?
Does the auditor have to check the individual items that were in error in the previous year, or just check the corrective action and test the current year results?
And you can jump into, Brian. I think the auditor, a lot of times when you get a finding, they're going to do a follow-up within that same audit that to make sure, like, let's just say you dispersed funds incorrectly within that audit. A lot of times the auditor is going to make sure you have followed up and returned those funds or done something within the audit where the audit was found or the finding was found. And then in the following year, there's going to be some testing or check to make sure it's not happening again, and to make sure that we don't have to do a repeat finding. So, and
I'll cover a little bit in this next slide as well. I was planning on discussing there that's probably going, if it's a significant enough reportable finding for that program more than likely would then have to be tested again the following year, based on the risk-based approach that the auditor has. So if you do have that finding, more than likely that same program is going to be tested, in which they're going to go through the same process on a new sample size of that type of testing and ensure that that corrective action was in fact happened.
hopefully
all right,
that answers.
Yep. So what happens now that I have a finding? So if we go to the next slide here, just have some of the potential consequences of that. And the first thing I wanted to start with is you'll see number one here, the low risk auditee. And 1 through 6 is going to define what a low risk auditee is. And why you want to stay a low risk auditee is you see that coverage threshold that the auditor needs to test. So normally, if you qualify for being a low risk auditee, they're only going to have to or required to test 20% to 20% of your total federal funding. But if you are a high risk auditee, you're going to then have to trigger into having 40% coverage. So with that, as the auditor has to do more work, they're probably going to end up having those costs flow back to you, because that was ultimately where that lied. So depending on how your audit engagement is set up, I just wanted to make you aware that that involves more testing moving forward if you have these findings or issues. And then the other thing that I wanted to just kind of touch on was how I was mentioning that it's a risk-based approach for defining which programs. You'll see on the left, we mentioned type A programs, and I just wanted to give a brief understanding of what that means. So the auditor takes the entire federal awards that you have and then develops a threshold that they're going to define as the type A threshold. Starts at 750,000, goes up from there. And if it's a type A program, you're going to have to do a risk-based, the auditor is going to do a risk-based assessment of looking at internal controls related to that, the dollar amount of that, the risk of the grant, past experience, which could include those findings, which would then trigger it to be another grant that we would have to test, and then that coverage aspect. So that's what a type A means. Type B is a lesser dollar threshold, but you're also going to have to go, or the auditor is going to go through a very similar process. So even if it is a smaller amount, but you had issues in the past or have weaknesses in controls related to that type of function or program, then that's probably going to be tested, even though it's not a high dollar amount. So just wanted to give you a baseline understanding of how those programs are selected. But then going back to the low risk auditee, to be a low risk auditee, you have to meet all 6 of these criteria. So you need to have an unmodified opinion over the past 2 years. So if you've had any issues that have triggered you to result in having a modified opinion, you're not going to stay low risk and have to test more grants. If you've had a modification to your CFA opinion, so if like I said before, if you didn't reconcile your underlying grant expenditures and you ultimately end up with having the inappropriate amount on your CFA and then the auditor modifies that opinion, you're going to then have to be a high risk auditee. Very similar concept, the material weakness that we've discussed already on the Yellow Book report or your single audit report over the past 2 years. A type A program, like I mentioned, if it's a type A program, you have a material weakness or a modified opinion related to that over the past 2 years, you're going to be a high risk auditee, and then known or likely question cost exceeding 5% of that type A program over the past 2 years. So you see a lot of this, they've structured it in a way that if you have a couple good years, you're gonna get right back out of that. It's usually a 2-year window for all of these, or it is a 2-year window for all of these. So as long as you're doing a good job rectifying things, if you have one blip year, you're going to have a little bit more testing done for 2 consecutive years, and then you might be out free and clear again. And the last one that I missed mentioning was the timely filing of the data collection form. So once again, that's due after you've submitted your final financial statements. It's due, and that is going to most of the time be handled by your auditor, but ultimately that filing timely, it falls back on you as the auditee. I've had multiple different clients that have picked up that they did not have it timely done, they switch over and then it's like, sorry, you got to have 40% coverage. We're going to do a lot more testing than you're used to. Sorry, this is the first year of our engagement, but it's going to be tough to have to do almost double or significantly more than what you were used to. And then just looking at the other potential consequences, these are the more big or significant issues that you might have. I know Stephanie mentioned the repayment of grant funding. If you had an unallowable cost, something that was identified throughout the engagement, you would have to pay back that grant funding or getting connection with that funding agency and see how they wanted to approach that. Sometimes they don't want the money back. They want you to identify and move forward or apply it to a new grant period, something like that. So it's not always going to be a repayment process, but they will have some sort of corrective plan for you to make sure that those monies are spent appropriately. But then the biggest one would be loss of access to federal funding. So that kind of goes back to those fundings. If you continue to build up a bunch of those issues year over year, you're now a high-risk auditee and you're having significant issues around your federal funding, then you could lose access. They could take you out of the running for getting those funds. I see Stephanie unmuted yourself. Did you want to mention something?
Yeah, I thought of one more, and I was just gonna say that there's also potential consequences depending on the program you're getting funding from. So Brian and I do a lot of colleges and universities, and so for colleges and universities, a kind of a potential consequence of getting a finding is heightened cash monitoring. And so each program could also have different consequences or follow-ups, and they could look a little bit different. So we weren't able to quite go into details because we're kind of covering all programs in this.
Yeah, but like the heightened cash monitoring, they kind of make you do extra hoops and obstacles in order to make sure that you can get the money. You kind of have to prove you've spent it on the appropriate stuff before you even can get access to those funds. So there's differing levels to that, but like you said, that can be applicable to different types of programs or different agencies in different capacities.
Just more legwork, unfortunately findings, like you mentioned before, that you're going to either the next year, you're going to have a larger population that the auditors have to sample, or if they're, the program's coming down, and a lot of times they're going to ask you to do extra reports or some type of proof that you can take the funds. So it unfortunately, just a lot of times findings can mean just more legwork for your team.
Mm-hmm. It's almost like the agencies lose that trust factor. The auditor shows that they've done something wrong, you lose that trust, and then it's to gain back that trust, you have to work extra hard.
I do want to say that, and you probably agree with this, there are some findings that are kind of a non-material non-compliance, where we mentioned just those. I feel like we're kind of scaring them about findings, but there are just those one-off findings where just, you had one thing go wrong, and it's just one of a population of 1 million, but it was a finding and a non-material finding.
Yeah.
I have seen many times where people get findings and nothing happens. No one ever contacts them. They resolve it the following year. So just because you get a finding doesn't mean that there will be kind of any contact or any issues. It just really depends, I think, on the level of the finding and how many you have and how many years the same finding has been on your report.
I would agree. Yeah, those last two on this slide are hard to get to, or I guess the second to last one is not hard to get to if it's specific for a specific cost or expenditure, but the last one is hard to get to. You got to be doing a lot of things wrong for a significant period of time. That's why this 2-year window to kind of figure things out is there. So I don't think it's anything. Yeah, one-off things or mistakes happen. So I don't think we should be scaring the population with findings. Good point.
Let's see. There you go.
All right, our third polling question, making sure we get some So once again, Stephanie's cooler than me, even though she won't say that she is, but I don't know hardly any of these shows, but what show within our gifts do you like best? I think I've only watched one show in its entirety out of these.
I haven't seen all of them, but I'm a Parks and Rec. I really enjoy Parks and Rec.
That's the only one that I've watched all the way through.
Okay.
And I do see we have a couple more questions. Well, Friends, I think that's probably the most popular
Yeah.
out of everybody. Although I am surprised about The Office. I feel like that's a very popular one too. But I do see that we have a couple questions. I say we run through the last couple slides, see where we are timing wise. And then if we're not, we will make sure that we send out responses to those.
Sounds good. And I'll try to go. These are just single audit reminders, nothing major. So, and it certainly isn't going over everything, but I'll try to go over these quick so we can take those questions. So just the first reminder, a lot of people, if you're a 630 client, you might have already run into this, but your DUNS number is no longer, and you need to get a UEI number. So it's not just a change in terminology, it's an actual change in the numbers. So, and your auditors will need this UEI number, which is unique entity identifier number, to be able to submit your data collection form. And so we have the website where you can look it up. I don't believe it entails too much for you to get this number. It's more of just putting your information in, and I think it automatically maybe populates the number for you.
Yeah, I just like you said, just emphasize, don't wait until your audit's over, because the only issue that you could have here is if you are asked by the auditor after you've issued the financial statements and they're like, hey, we're doing the data collection form, what's your UEI? Oh, we haven't gotten it. And then somehow you miss your window to have a timely filing of your data collection form. And then all of a sudden you're a high risk auditee.
Yeah. Good job at scaring them.
Oh yeah, I'm just apparently scaring everybody. Sorry.
This one's kind of old, but it's just a good reminder. CFDA number, the Catalog of Federal Domestic Assistance listing number. That terminology is out. The new terminology is assistance listing number, so ALN. Not sure why they changed the terminology, but they did, and that was probably picked up for everybody in the prior year's audit. But I'll say I've still, every once in a while, you find CFDA hidden in the notes of the financial statements. So I always just try to do a nice control find for CFDA and make sure I've caught everything throughout the financial statements. Next one is COVID-19. This presentation, again, it was to colleges and universities. So we say Ed is the Department of Ed, but it's actually for all entities and all programs. You are required to put COVID-19 on the CFA and also in your data collection form in front of the program that you got any funds related to coronavirus, and also a breakout of those funds. Even if you you already had that program before they gave you some additional COVID relief, you need to break out those COVID relief funds from your kind of regular program dollars as a separate line, and then listing it as COVID-19 in front, so that you're identifying that it was related to COVID-19, and that's why you got those funds. And then again, like I said, on the data collection form as well.
Yeah, you'll want to make sure you still include a subtotal for that if you do have to break those out, because the CFA is required to have a subtotal by grant or assistance listing number. So you just have two separate ones. One would be COVID whatever, and then the next one would just be the regular terminology, and then a subtotal for that. That I keep wanting to say CFDA number still, but it's ingrained in my head.
The next one, this is HERF subawards. I don't know if there's any other programs that
it's the Education Stabilization Fund as a whole.
Yeah, were there any other, is there any out in the compliance supplement that have kind of sub awards? I'm not,
This is the most significant. This one goes through like H or J or K or somewhere around there. So yes, if you have those, you need to break those out by alpha characters at the end. So this is 884.425 A, B, C, D. And some entities, like if school districts or some other things, they may have almost all of them, depending on how many they have. So yeah.
and that's again, I believe it's on the CIPA as well as the data collection form. It needs to be broken out on both. And then
That's
again,
correct.
like you said, a subtotal as well. So non-cash assistance. So this is if you receive kind of some in-kind items or any assistance from the federal government. Those amounts need to be reported on the CIFA and within the notes of the financial statement. So just a reminder that anything you got, like food commodities, vaccines, donated property, those still belong in the compliance section of your single audit. I think they're many times forgotten. So state pass-through awards. So this is just a reminder that if you're getting an award from a state or county, just being really mindful to know where those funds originated from, where they originated from the federal government, and they should be reported on your CIFA in the federal section. So really asking questions when you get awards, making sure you understand what program and who passed those through, if someone did, so that it's not a finding in your single audit because you weren't aware that it was a federal funds. And then when we get to audit time, we learn that they are. I won't read all these, you guys can take a look, but these are all the high risk programs. So that compliance supplement that I had mentioned earlier, every year they issue what are high risk programs. And so these are programs that your auditor, there's a few instances where they won't, but it's almost a guarantee that they will audit these. If you have these programs, they're going to audit this program as part of your single audit. Next, this is really mostly, there might be some other entities that do these type of reports, but this is mostly for colleges and universities. And we've been noticing getting incomplete submission letters from the Department of Education. So there's some supplemental schedules that colleges and universities have to give to the Department of Education. And a lot of colleges and universities are getting these incomplete submission letters. And our recommendation is just to do an indication, and it's all related to related parties. So if you have no related parties, our recommendation is just making that very clear instead of just leaving it off and not saying anything. It's just to go ahead and say there were no related parties identified, or pointing to where the related parties are within the notes of the financials.
And I will mention just auditing standards changed recently, and related parties is a heightened area of emphasis that you may be tasked or asked more by your auditors, that you'll be more about their related parties. So just be aware of that really go through the process of understanding what your related parties are, since they'll be asking.
So the next ones are really mostly related to, I'm just going to go ahead and open them all up. They're mostly related to colleges and universities. So I'll just try to quickly go through them. Name, image, and likeness compensation. This is just talking about there's some guidance for students who are receiving compensation, and there's guidance out there about how to handle it when giving out awards. HERF awards, that's from Department of Education. It's a COVID relief, and just reminding people that their third award, there's some earmarking requirements and quarterly reporting to forget about. Selective service suspension. Males no longer need to file or to register with selective service to get awards. And then verification suspension, again, another Department of Education requirement, and it's just been suspended for 2022, 2023. So that will take us to our last polling question. And it's, do you like single audit presentations with gifts? The answer is yes. We had fun putting them in the presentation.
And then I think we can, while everybody's doing votes there, we can look at a couple of these questions that we got. I see one here. What steps are needed to avoid a finding? They may be subject to their first for record keeping and want to avoid issues. The first thing I'll point you to is that compliance supplement that we've been mentioning. That compliance supplement is what your auditors are going to use to come to you and ask you their questions. That's what they're going to define their audit procedures around. And most of those have, so if you say you search your CFDA number assistance listing number, you search that and you find that in the compliance supplement, there will be suggested audit procedures. So you can really see what they're going to be looking for. But I think the biggest part for a new subject to audit would be defining your controls, because that's somewhere that you may not be considering. You probably know, okay, this is what I can spend the money on. I have to do it in this period. Those are pretty defined and easy. But are you substantiating controls related to that, since the auditor's opinion does have a requirement for looking at those controls? So if you can define controls for each compliance requirement, that's integral.
I'd also say signing up for bulletins. Sometimes, a lot of times, the department, whoever is issuing the funds, you can sign up to get notifications of changes and updates. And so making sure the right person is signed up and that person is giving out the information to others who need to know. So.
Do you want to share the results real quick, and then we might try it? We can probably squeeze in. Oh man, there's some naysayers out there. Well, Stephanie did it for the naysayers. She made the presentation. All right. Did you say high risk is triggered for any of these 6 or all of these 6? So it was any of those 6. So if you had the material weakness, if you had any of those other modified opinion, you didn't do your data collection form, any one of those within that previous 2-year period would trigger you to be a high risk auditee and have 40% of your federal awards necessary to be tested.
And I think you said it, maybe stressed it before, but it's a 2-year period too, which kind of stinks, because you can fail 1 year and then you're going to have to keep doing it for that next year too.
Are related auditees with different tax identification numbers considered as the same auditee regarding potential consequences of a finding? I'm not sure about that one off the top of my head.
I might be, I mean, if it's a consolidated entity, I would think it all falls under the same report, but we might need to kind of look.
Yeah,
That
we
was
can
at least
do.
what I was thinking, if those entities are getting consolidated.
And then I think Maddie is responding. Can we get a copy of the slides? Yes, I believe those will be available, and there will be a recording of our presentation available after this. And then the last question is the selective service requirement retroactive or applicable only for those meeting the age requirement as of its effective date? It would be only those meeting the requirement or enrolling as of the effective date. It's not a retroactive. It doesn't remove everybody that's previously been in the system. All right, well, look at that. We're 1 minute shy. I think that's all we have. I don't see any other questions out there that we missed. Hopefully you enjoyed our time. And once again, thank you, Stephanie, for being such a great co-host.
Likewise.
All right, take care, everyone.